Canadian couple dial into Dave Ramsey's TV show and they share their story about their financial struggles. And guess what? Their financial struggle is directly tied with their primary residence. The couple is from British Columbia, Vancouver, and they purchased a property. They carry a mortgage of $1.4 million. $1.4 million mortgage. I don't know how much they've paid as a down payment. So assuming the house price might have been $2 million because the average detached house price in Vancouver is around $2 million. So they carry a mortgage of $1.4 million. Their mortgage payments to sustain that $1.4 million mortgage is $7,200 a month. Okay, and their total outgoing cost, including bills, groceries, car payments, fuel, and etc., is around $12,500. Couple together make up to $300,000 annually. So they're not an average Canadian, they are high earning Canadians. Okay, now the problem is at this stage they're barely making the expenses. So whatever they earn, they're spending that entire money into the overall mortgage payments and expenses and all that stuff. So they're not saving anything. And the problem is the wife has gone on maternity leave. Now they only have one earning partner. So their earning has reduced from $12,500 to $8,500. $8,500 a month. Okay. Now they're burning cash. Okay. They're not earning enough, but the expenses are way above their earnings. This is a fascinating story because that tells you the state of the Canadian housing bubble. And a lot of people were able to maintain that mortgage because the interest rate 3 years ago were quite low. Now those interest rates are much higher. And as the interest rate has gone up, the monthly payment, if it was a variable rate mortgage, has also gone up. Okay, so this is the reality, guys. Okay, and I'm so sad to hear this story that how Canadians are putting themselves into a so volatile financial situation where if they lose a job, they have no ability to sustain their property. Okay, a lot of people I know who have carried that higher mortgage are basically renting out their basements and extra rooms in order to just collect extra income to be able to afford the mortgage payments. But that's not a sustainable path. You can maybe try this for a month, 2 months, 3 months, 4 months, 6 months. But you cannot sustain like this forever. And if you cannot afford it, move out. Like, you cannot change the market dynamics. You have to understand your own financial situation and then act accordingly. And if you look at this chart, this will tell you the very close correlation between the house price appreciation and the money supply. Okay, so this M1B is a measure of money supply in Canada, and you can see a very close correlation over 45 years of period. As the money supply grows in Canada, the house prices also grow along with that. Okay, so we have around $1.4 trillion as spendable dollars in the Canadian economy. And as it has grown over 45 years, we have seen the house prices have also grown along with that. So if you want me to blame just one entity that is responsible for this insanely inflated house prices, is banks, your banking system, your big five or big six banks in Canada, which controls almost 80% of the outstanding mortgages in real estate. They're the one to blame to inflate this housing market. If you have the banking system is only creating credit towards the residential housing market, they're the one to be blamed for this. Okay, in a healthy economy, you don't have a imbalanced ratio between the business investment versus the residential investment. OSFI has a role here to kind of maintain a healthy balance between the credit creation towards business investment versus credit creation towards residential investment. The ratio here in Canada is out of whack. We have too much credit creation going on in the residential investment, which is non-productive asset class. And we have a declining trend towards the business investment in Canada. And that is the fundamental problem in Canada that is fueling this house prices to an insane level, where a family earning $300,000 is not able to afford the mortgage payments in Canada today. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up and subscribe, and check out the links in the description below. Subscribe to my newsletter that I send out on a weekly basis. Let me know your thoughts and feedback, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.